Okay, Friday the 13th, January, Friday the 13th, 2017. Henry requested what my charts mean. All right, so what I have here is Amzn. Now I first start off that, let's go back to the beginning. Okay, and when the S&P was at 683, I turned bullish. And in 2013, I said that the market would get to 2,200. And then in the beginning of 2016, at the low, I stretched it to 2,400. Past Brexit, the crowd began to get a little bit frothy, and it showed up in put call ratios. And at 2163, I basically said the last 10% is for whoever. I'm going to just kind of stand aside. So basically, I'm cautious after, 7 years, 7, 8 years, whatever. The market. Okay, so now recently, after the election, okay, prior to the election, we had a lot of put buying, and the market took off. Okay, so here we are at highs, but we're having a divergence in the number of issues participating. And 8 years is a pretty long move for the stock market. We also have a regime change which shakes the tree. We also have interest rates going up. So my cautious is I'm looking for selling opportunities. Okay, so I start off with just a long-term chart and work my way in. Here's a quarterly of Amazon going all the way up. The first thing that caught my eye, the red line here is unbalanced volume. On this chart package here, stock charts, I fell in love with unbalanced volume. I didn't before over my 40-year career because it can be skewed with options, but for some reason this one stands out. One of my favorites is RSI. Basically 2 steps forward, 1 step back is +1, 2 steps forward, 1 step back is +1, plus the +1 is +2, okay. The first thing that catches my mind on here on a quarterly basis is that we do see, just a quick eyeball, is we do see that Amazon is going higher. This is a logged chart, so the trend line is important. This holds you in there, okay. Is that you're beginning to see divergence. The purple is RSI. Okay, so you're beginning to see some divergence here. Prices are moving higher, but the relative strength underneath is not. And then I also have money flow. Okay, money flow tells if unbalanced volume is greater than money flow. Okay, that tells me that the little guys are in there. So the volume part is the onesie twosie people, and the money flow are the heavy folks. So back in here, you can see where the money flow was above the unbalanced volume. So the pros were getting in here on Amazon. Okay, so let's work our way out. Now the deal is stocks. Okay, basically it's what's ever left over after the bond people are paid and taxes are paid and blah blah blah. To me, an equity or a stock, it's just another trading vehicle like silver, gold, whatever. The problem with equities is that they have a tendency of going to zero. You know, Walmart will eventually look like Sears. They all do. We've designed corporations to fail. That's what it is. And I guess now most corporations used to last they used to last longer, about 50 years. Now they're lasting less than 20. And when the leader leaves, it's over in about 5 years. So you can take Apple for instance, but so we work our way through on Amazon again, and what I'm doing is I'm looking to see about, the first thing is trend. It's going up, okay, that's fine. But it's coming to the end. I mean, it's an equity, right? I mean, it could have great earnings. I mean, Amazon, what do we have here? Here's a P of 187. That's probably the lowest it's ever been. I mean, as Amazon was going higher, it was at 6,000. I'm a technician. I'm like a doctor. I come into your hospital room. I grab your chart. I take a look at it, and then I ask you how you feel, which are the fundamentals. And then you, of course, say that you feel fine. I look at your chart, and I say you're going to die. All right, I'm not knocking Amazon. I'm not here to stroke my ego. I'm just a navigator. All right, so we get back in here. All right, and as you can see here, here's on unbalanced volume on a weekly. I prefer weekly charts. It keeps you in there. You can see down here, the unbalanced volume was oversold. Okay, in this area, that was low. Okay, we moved higher in October. We hit a high. Okay, then Amazon came off. Amazon dropped what, 15%, and nobody said a word. Nobody said a word. Amazon dropped 15%. Okay. Retail sector is kind of soft here. Same thing with Amazon. Yes, they may be hiring people. Yes, blah, blah, blah. But it's the same thing as Sears Roebuck. Amazon is nothing but a glorified Sears Roebuck catalog. All right, so here's a weekly. Then I break it down to a daily. All right. Okay, so on my daily here, we have a gap. Okay, in theory, only 2/3 of gaps are filled. Okay, so this one is filled. All right. So here's the first signal. Will it continue past the gap? Okay. I don't know. We'll all know. The easiest thing is just to now break it down and follow it in a little bit closer to see if it holds. Okay, so this is on a daily. So then I broke it down to a 2-hour chart. Now the signals are a little more sensitive, of course. Okay, so we have a gap fill here. So we have a gap fill. So this is the first thing. Secondly, okay, you have a screaming amount of unbalanced volume up in this area. Now, mind you, here are pivots and R1 and R2 for intraday. But what I'm looking at here is that the market in general it's a little frothy here. Okay, I don't know if we need to mark time or if we need to drop 15 to 30% and reset this on a macro level. We're supposed to be in the home building and auto replacement cycle, and with higher interest rates and a stronger dollar and less on exports and more on imports. Okay, but for Amazon and that, bless them, they're into other things, the cloud and rockets and everything. That's fine. Okay, but it's mostly how I treat the market is what's in between people's ears and not what's on paper. Take today, for example. I write, okay, so I'm a technician. I send out letters, newsletters and stuff. I wrote yesterday about JP Morgan, okay. There's a lot of unbalanced volume in there. Things are frothy. Everybody's in the long bank boat, right? So if we're all leaning over this, it could be an intermediate move here. The real estate cycle is not supposed to peak until 2024. We should have one recession prior to that. Okay, how is Amazon with the expanding, if you believe in fundamentals, if we hit a recession? Okay, remember, Amazon is stuck with warehouses full of stuff that they probably can't move. I don't know what their shelf flip is, what have you. I don't know. I don't care. So we have right now, we have basically a frothy RSI. I don't know when the earnings are, but what I'm looking for is areas to go against the grain here. You saw with JP Morgan today, it traded higher, exactly what the market makers had, and reversed and went red. Okay, so all this is I'm just using the technicals. This is just like a doctor looking at it. For regular technicians, we can be sloppy about this and say that this is an A pattern, and then a B pattern, and then a C pattern, and then head lower. Okay, but all I'm doing is, we got the gap. I wrote about this on the way back up from this sideways, okay, pattern here, that even if it gets back up here, it still looks like a crappy stock for now. I mean, you saw on I guess I didn't put it on a yearly. It's basically after the recession, it's gone higher. Okay, this pattern here, here's where it opened and traded, and this is where it's at higher. I'd probably expect Amazon to come back in and trade below this level here. Let me take a look here. What's this level? 663. Okay. Is it still in a bull market? Sure. You can just draw a trend line underneath here, under the lows, and we'll change the color. Same type of deal here. Okay. So the thing is it's not that I'm bashing Amazon, that there's something wrong, blah, 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 blah. But all it is just that the gap was filled. The market's frothy on the short-term basis, and like I said before, I wrote about this, I think weeks ago, I don't think a couple months ago, but about Amazon. Even if it does fill the gap, the chart pattern looks ugly. Okay, so here you have, once I pointed out again, unbalanced volume was oversold down here. Here was the bottom. Bodies moved back in. It got frothy up here in October. It gapped lower. Okay, and now we actually are filling the gap. Okay, will it continue higher? That's fine. All I'm doing is I'm pointing out that it's filled the gap. This is one of those where, in theory, it'd probably have to lose the 790 again for it to come back through into the channel. So we'll see how this plays out over the next X amount of days, if this continues higher or if there's going to be resistance up in here. Let me do a quick point and figure chart. Now, what I like about point and figure, it doesn't include time, it just has price. Okay, so we all trade price unless you're an options person, and then you'll trade some time, either selling it or buying it. I'm a big fan of covered writing. Okay, we've all purchased options. Most of us have purchased options. It's either your score or it's zero. Most of the time it's zero. So overhead supply, okay, this is the volume level. Overhead supply would be about 828, and we're in the 820s area. Okay, so this will be the next area where there'd be some resistance level. Remember that there's a lot of people up here, okay, that are holding above the gap, all right? Came down, now it filled the gap, so they have to decide if they want to get out of their losing position, okay? Let's take a look again here real quick. Okay, so this is $150 range. You just filled the gap. If it comes back below the 790 in this area, I would assume then that we're going to come back down into the sixes. Okay, this is a strong amount of volume down in this area, which is what's at around 770. So for just right now, how I'm looking at it is we have a gap fill, we have a frothy market. It's coming into earnings, I suppose, whatever. But basically, I'm just looking at it as it's filled the gap. This, for all the people that are in here prior, this is their chance to get out of it. But a lot of people have hope, okay, that it goes a little higher, then they can get out. But all these people that were up into this area, they're still, it's getting close. But if it comes back down, now we're looking at it, this was the wave 1 down, wave 2, and then wave 3, and it'll come down, and it'll probably it'll come with the rest of the market. That's how I look at it. You can just see the unbalanced volume. You have a peak up in here. You had a high. You had where they went chasing after it, and they got caught. It dropped all the way down. And now here we are again. We have frothy unbalanced volume. Prices are right up in this level. What's this? Okay, this makes it a little better here. 65 and 70. That would be the last. For any of the bulls, this area would be the last that vestige, and that's the end of that. You can, like I said, look for RSI divergences. That's a 2-hour chart. You can put up a 30-minute. You can begin to start seeing that things are, here they are. They all bought into Amazon today, basically, is how I read this. So these people are all going to get. I used to be a floor trader years ago after I left E.F. Hutton in the 80s. I became a floor trader, and I became a branch manager in the Gulf War. I know my limitations. I'm best as a navigator. But basically, it's psychology. If everybody wants it, I don't want it. If nobody wants it, I want it. So all this is, you can take a look here. You have your money flow and your RSI, and you're getting a divergence on this, So I'm going to assume that these folks here, the people that bought into Amazon, looks like on this breakout, they're going to be in trouble. But it's a flip of a coin, right? So, you just basically hang on for this last trend line. It's basically how I'd look at it here, because you have your longer look on here. And just draw your trend line. You can draw a trend line across here, but this is basically it here. You may end up with a double top. That's fine too. But you saw with what happened last time when unbalanced volume began to pick up, it dropped 150 bucks, 130, whatever. But if it fails here, it comes through, it's coming back down. All right. So hopefully Henry here, this works for it. I'm just one guy. I'm just pointing out what I see. You know, it's for what it is. I mean, you know, I'm just saying, look, it filled the gap, screaming on bounce volume. We're beginning to get RSI divergence on here. And the people that bought into it basically bought it in the last day and a half. So I'm going to assume that these people are going to get stuck. All right. So have yourself a wonderful weekend. And remember that Monday is a holiday. And then we get the new POTUS comes to town, right? Something to that degree. Everyone take care. Bye-bye.